play. But then you find yourself in the situation where you actually have to act upon that idea or that model or that edge, whatever you want to call it. And, it's very easy, especially in the beginning, I guess, for new traders to be carried away from that very, well-established, well-structured process where your psychology somehow gets in the way. And instead of keep on basing your decisions and your actions on that model, you're carried away because maybe you're looking at social media like Discord or Twitter, or maybe you're looking at the news, you're watching the TV, whatever. And all of a sudden, there is these logical suggestions, I guess, where at the end of the day, all the plan goes out the window just because, at a very core level of your brain, there is something which clicks, and it's so powerful that can erase a lot of weeks and months of researches and back tests, and it can just screws up your plan entirely. Just because
I think you
at a
really
point we
touched
are humans and
on
we
something
rely
really
a lot
important,
on emotions.
Yeah, I think you touched on something really important. I mean, the idea that, when you're in a fearful state or when your mental constitution has broken, there's really, when you're in that state, it's hard to identify, right? It's very difficult to know you're in it when you're in it, right? So
Yeah.
it's not exactly like, it's very difficult to say, okay, I'm in a fearful state, my decision making is compromised, or on the flip side, I'm in a euphoric state, my decision making is compromised. It's really hard to do.
Yeah.
And like you were saying, it's like having models or plans, right? Because if you have a plan, the plan was formulated outside of that state, right? So,
Yeah.
and it's very mechanical
Again,
too, right? You can follow it, right? You might not be able to necessarily recognize what emotional state you're in, but you can follow a plan mechanically. I mean, objectively, you can, right? I mean, if you wrote something down, you could follow it.
You can. Again, I mean, Roman is it's still listening to us. So, I mean, I was just telling him about that, right? 10 minutes before you joined the conversation, and I was like, it's really easy to come up with a strategy, and because we were talking about risk models, right? He was asking me, how do you manage risk? How can you be so cool? How can you be so calm, even if maybe you got a position running against you or whatever? And I was like, yeah, it's every single time you put on a trade, you always take the chances that a position can come against you. But in order to be able to stick to the plan, you need to play what you consider a reasonable risk, and especially a risk that you can keep up with. Because, and actually I was quoting you, Anthony, because I was saying, getting back to your videos when you were describing how low your risk is per trade. I think you were talking about like 0.15%, something like that. So it's really easy to manage positions like that, because it's not like you're putting on the line so much money that at a point the money you're risking can actually affect your psychological thinking and make you put on a different perspective your plan against your P&L. But since you are risking so little, you are still able to relate to it and say, yeah, okay, I'm down money, but the setup is still the setup. So I'm going to stick to it because I know statistically that I got an edge on it. While people that may go, over risking, over leveraging, or risking more than what they're really willing to lose on a single trade, even if they have a winning strategy, if the risk is too much for their own psychology, they're going to screw up things, because they're going to reach that threshold where the risk they're taking, the drawdown they're facing is so high relative to the expectations that, every plan will go out the window, And it doesn't have anything to do with the strategy, the methodology, or the plan, the risk management model. It it all have something to do with your own psychology and what amount of risk and pain, financial pain, you are willing to endure. For me, that is
Yeah.
at
Well, I
least.
think the alternative to that, right, is if you like feel the urge to risk too much in the market, it's easy to think like that you see an opportunity that's just totally unique, and it's just you're never going to see anything like that again, and that you have to increase risk. And
Yeah.
really, that feeling doesn't reflect a reality that exists in the market. It's just reflecting something that exists in your mind, right? An emotional desire to be in a
Yeah.
trade and to embrace risk. So I think if you think about that, then you realize that unique opportunity really isn't there. It's just in your mind. Because again, an edge like an edge is slight enough that it's not it's so slight that it doesn't give you any basis to form an expectation based on an individual outcome. So
Can you repeat that? The last sentence?
yeah, an edge is so slight that it doesn't. There's no basis to form an expectation about an individual outcome.
Oh
I see what
yeah.
you mean.
You know what I
I
mean?
Yeah.
agree. I
Like
agree.
there's
It's
just
very well said.
no. You know what I mean? Like
Yeah.
if
Totally agree. Totally agree.
yeah, it's just like if in the way I notice it play out, right? If you think about like, well, people they'll understand that on a matter of 1 degree, but then if you escalate it to like multiple degrees, and what I mean by that is like an edge failing
Yeah.
twice, right? So a lot of times what will happen is if somebody's invalidation gets hit on their trade, then they'll start to apply rigid beliefs about what will happen after that, right? Because now it's moving into an exponential series, and what essentially I mean by that is like if you think about the edge of okay, so if your invalidation gets hit, say you had a 40-60% edge, and that the 40% probability played out, your invalidation got hit. Well, then really what's happened in that scenario is that the probabilities have shifted unfavorably if you were still in that existing trade. So say you were in a long position and your invalidation gets hit, it doesn't necessarily mean that that the floor is gonna fall out on price. And what actually is happening there is that the statistics have shifted unfavorably. So now maybe it was 60-40 in your favor, and then now it's 40-60, right? So there's an unfavorable statistical probability there, and that's why you got out of the trade.
Yeah.
But there's no
There is a flip.
guarantee, and
Yeah.
people tend to see when they enter that, right, then they start to see things rigidly. And if you think about it, what's the probability of a 40% scenario playing out twice? Well, it's like 16%, you know? So if you're going to go on tilt 16% of the time, like that, it's not good.
Oh yeah.
And especially like in the past couple of weeks, a lot of our as well, unless you guys trade forex, I haven't followed religiously forex, but like if from a retail market or a crypto perspective, like a lot of our risk models go out of the window a little bit because of the insane volatility that we've been living. You know what I mean? Like even on the smallest of time frames, a candle
Oh,
could 3%, 4%, which is insane.
I don't think I'm following you. What would you mean by the risk model going out the window?
In a sense, like I find when volatilities are extreme, like it's harder to apply your risk model in a sense, or your quote unquote
Well,
risk management. Anywhom, I've had a harder time, let's say, the past couple weeks with
okay.
much higher volatility.
Yeah, I noticed that too. And it's, again, this is just a unique perspective. Not everybody has to embrace this perspective. And on one level, I realize it's accepting on one level, it is embracing the risk of ruin, which is like a cardinal sin of a trader.
Oh yeah.
But essentially, the only way I was able to do what you're talking about is to think of things in Bitcoin terms, because I was trying to I was trying to risk on my live account. On my demo account, I do different things, but on my real money account, my live account, I trade with 0.15% risk, so 0.15 basis points. And the only way that I was able to find an entry was to denominate in Bitcoin. So, like, if you're denominating in USD, then there's really no trades where you can trade
God forbid you.
0.15% in
There
USD.
you go. That's what I was trying to say. Mm-hmm.
Yeah. So, and the only way I could find to trade at that risk level was to denominate in Bitcoin, right? And then, and so so essentially, when I enter a trade on my live account, say my trading account just for simplicity is 1 Bitcoin, then most trades I enter, if I lose the trade, after that trade, I'll have, point whatever 0.15 out of a Bitcoin.
Yeah. But that's I mean, it is a subtle difference, but it's subtle on paper, but it makes all the difference in the world when you're actually trading an account, because the unit of account in which you are denominated, it can be very, very impactful on the way you're managing trades or taking entries, in my beliefs, right?
Yes. I mean, this is just the way that because I experienced the same thing you experienced, Roman, and people have different strategies for managing that. A really good strategy to deal with volatility is to trade different markets, and to have different trading accounts, not have multiple trading accounts that are trading different strategies in different markets. That's one way to do it. The way I did it for trading Bitcoin was what I just talked about, and for me, it's kind of it's a different perspective, so it kind of ties into my overall thesis about Bitcoin. And again, I acknowledge it's embracing a risk of ruin, right? If I denominate in Bitcoin, then and something crazy happens, the network fails, then I'm going to get hit really hard.
But as in any other market, you could be like hit that hard to get to the risk of ruin. So it's not just Bitcoin. It's any market.
Yeah, I mean, ultimately, if I don't want, you wind up like all roads lead to Rome, right? So if you don't want to be broke, you have to hold assets, and every asset has some risk of ruin. Right?
Oh yeah, sure.
Does Bitcoin really have more risk of ruin than other assets? I don't. The more I think about it, the more I think it probably has less. But it's still there. I mean, it's there, but
I think myself and Ilya, we're the last people that need to be convinced of what you're saying, because your philosophy was kind of the reason why I sold everything, put on the hedge on Bitcoin, and not necessarily to protect my USD, because I didn't care about the USD value. I said to myself, well, by protecting the value I have today, by just purely hedging, not even looking for quote unquote dollar profit, I'm able to at least obtain more Bitcoin. And that was just like the essence of the quote unquote hedge. Mind you, I did add at some point a bit of short, like net short, but that's a different story for a different day. But I fully understand that, because I try to kind of calculate my value of the account in Bitcoins and not in US dollars. And that, I don't know, it helps me a lot more process what is happening in this crash in my account and so forth and so forth, but you need to have a long event horizon if you want to go and use this strategy.
Yeah,
Oh
no, I
yeah.
mean, and that ended up being a good trade for you, and it worked out, and I'm sure you made more Bitcoin, which is good, and you know, you know, so that's a great trade, and and that's a good perspective to have, like, I'll illustrate another way, like, I remember during 2020, I didn't have that mindset, the run up to in 2020 and different perspectives.
And you mean after March 2020?
Yeah, so like,
Oh yeah. Okay.
so
Got it.
I
Got it.
didn't have this perspective during like the most of that bull run. Like I was denominating in USD. Like I mentally thought that like everybody else does, right? Anyone who hasn't embraced the Bitcoin standard, and I was doing, I remember exactly when it hit me, right? During the bull run, I was really, really profitable. And I was like, all those months I was making, 30% returns on my account every month. And I remember thinking like, wow, I've really turned the corner on trading. And I was kind of like patting myself on the back. And then I had this moment where I realized I actually underperformed the Bitcoin market. I underperformed the market. And that really reframed everything for me. I had less Bitcoin than I did when I started. And so that kind of put things in perspective, and then my mindset shifted. You know, so
Absolutely.
I think it's a
But
good
again,
standard, right? Like if whatever your strategy you're doing, you have more Bitcoin afterward, then there's probably an edge there. But if you have but less Bitcoin, but more dollars, that might be a problem. Might be problematic. There might be something you're overlooking there, right? If you're underperforming the market.
yes, but at the same time, the strategy and the mindset also needs to shift just a little bit depending on what's the phase of the market. Meaning, in a bear market like we are, whatever, let's call it in a distribution market like we are today, you want to accumulate as much as possible Bitcoin because once the dust settles, you don't have to do much to be intelligent. You know what I mean? You're gonna let the market do what it does. So this is, but when the market is going, how can I say this? When the market is going up, you want to accumulate as much as possible the dollar, quote unquote, to what Bitcoin is pairing itself towards, to have the, because you want to basically accumulate the asset that is under losing value in a sense. Does if that makes sense?
Uh, Not really. Can you explain that?
So you want to always get more of the asset that is quote unquote losing appreciation during a bear market. So let's say if you accumulate as much as possible dollars for whatever strategy you utilize, let's say your end goal is Bitcoin. So let's say you have half of your equity in Bitcoin and half of your equity in some other asset that could outperform Bitcoin, but your end game goal is to have as much as possible dollars. In order to, why do you want to have more dollars? Because whenever Bitcoin will start depreciation, like it is right now, losing its value in the bull market, in a bear market, you can then purchase more Bitcoin. You know what I mean? It's like the cycle of, uh, because this is where you have the biggest opportunity of accumulating the most amount of Bitcoin.
Okay, yeah, no, I follow you now. So, and I agree with you, right? And I think you're applying the right metric, right? So yeah, if you're applying a strategy, and in a bear market, right? If you have a successful strategy in a bear market, it's going to help you acquire more Bitcoin during the bear market,
That's it.
right? But what?
Exactly.
So yeah, so I think we're in agreement there. It's just I was kind of talking about people who they have maybe they're profitable in USD terms, but they're losing some portion of their Bitcoin balance, which is possible, right? You can appreciate in USD value and then lose Bitcoin balance. And that was what I was talking.
Absolutely.
Yeah, that was what I was talking about. Is that could be a scenario where it feels like you're profitable because your USD balance is going up, but then your Bitcoin balance is going down, and that was what I was saying. It's like it's that's a gray area.
And
Yeah,
And again,
it
this
depends
is
on.
just an unorthodox opinion. Obviously, not everybody's going to agree with that, but you know,
No, I guess it depends on how you denominated your own account. Because let's say if you're trading Bitcoin using a CFD broker, you don't really give a fuck about Bitcoin. You just care about your account, which is most likely denominated in dollars or euros or pounds or whatever, right?
yeah,
So it's always a matter of perspective, I guess.
yeah,
absolutely,
and not
absolutely.
everybody's going to have the same perspective as me, like the big
Yeah,
macro perspective, right? My
exactly.
perspective that I
Yeah.
approach it with is like that's the generational trade, right? Like in everyone's lifetime, there's tends to be one big trade, and that
I guess so. I
you know
guess.
what I mean? Like
Yep.
when I look at my parents' generation, right, there was a very clear and obvious generational trade, and that was being long bonds, from the 80s up until recently, actually until very recently. So that was the generational trend of my parents' generation. All the guy like
It's
it was the thing, like if there was the one thing you didn't want to miss, right? If you missed it, you fucked up. You know, if you weren't long
yeah.
bonds those decades, you fucked up. And it was the
Yeah,
most
well, I
important
guess
thing to get right. It was like the most important thing to get right. The big picture.
yeah. I
And
guess I mean it could be out for debate, but yeah, I guess that period, though, all those people were looking at it and they were thinking about it like the trade of a lifetime. Yeah.
yeah, I mean, all the guys that are on TV that people admire, they all got that trade right. They weren't short bonds. I mean, maybe there's one exception, but I just, it's one of those things. It's
I
like,
mean,
you know,
if you know Raul Paul, do you know who
yeah,
Raul Paul is?
yeah.
Yes.
I mean, he's one to going long bonds now.
Oh, he's long bonds now.
He wants to build up long-term positions in bond now.
Really,
So
that's interesting.
yeah. So and again, I mean, I'm just bringing that up because I follow him and I know that at the same time he's a huge, huge, huge crypto advocate. So
Yeah, no, so there is a possibility that he's wrong, and I think
oh
part of
yeah,
the
absolutely,
psychological
yeah.
factor that might play into him being wrong on that is the fact that he's an older guy and his whole life that was the trade, so it's like, and then in my personal opinion, that generational trade has ended, right? Like my parents' generation, you want to be long bonds the whole time, but now it's different. It's no longer like that. It's not there. But if you're a guy who spent his whole life and all you had to do was be long bonds and you just had decades of reinforcement, right? So
Yeah.
if that changes, right? If it's, if like being long bonds is a bad financial decision, but you spent your whole life being profitable with it, it's very hard to pivot after all those decades.
Well, it's out to debate because maybe he's on an old generational standpoint, but he's also one of the guys who is massively long on Ethereum or crypto in general. So there is
Oh,
a little bit of a gray area there. Because if you look at the videos he put out, right, is a massive crypto advocate, and he was one of the few who was actually, postulating a flip side, and the infamous flip in between Ethereum and Bitcoin, and it was actually more on the side of buying up Ethereum rather than Bitcoin because he was buying into these. I guess you could call it narrative about these decentralized whatever. It's some sort of the topic we were discussing just yesterday about building up something on the new web 3.0 internet instead of some money, whatever you. So I mean, he's really into crypto. I mean, he's really a believer, and he put his money on the line
But
with Bitcoin and with Ethereum. But he's
isn't
also willing to go massively long on bonds.
isn't Real Vision his channel?
He's the CEO of Real Vision.
Okay, that's what I thought. And I really enjoy the channel. Like I'm a fan of his channel.
Oh yeah, there are a lot of different personalities on that channel. Yeah, it's kind of
I
uh,
would be interested to
there are
see,
a lot of collective.
to actually look at his portfolio and see, is being long bonds a hedge against? Because, if you think, if you believe in the Bitcoin macro thesis, then being long bonds would be like a hedge against that. So it'd be interesting to see if what his allocation is. If
It could be even that. Maybe he's just trying to build up a position, in
or if
some sort of a case of emergency, But
or if his allocation might tell you that his Bitcoin position is a hedge against his long bond position. But those are two very different things, right? And that tells you a lot about what his opinion is.
But if
even the time frame could be very relevant, because maybe he was trying to build up a long position on bonds, but maybe just for the next 2-3 years and something like that. So you never know. Because if you believe in the dollar milkshake theory, being long bond wouldn't be a bad idea, especially now, which is a monthly support.
Okay, yeah. Well, why don't you guys talk a little bit more about the dollar milkshake theory and what, why you guys are bullish on the dollar and all that.
It's basically some sort of a theory which was postulated, I guess, a few years ago, and it's all based on the current monetary system and how it works, which is very dollar based. Of course, we know that the dollar is the global reserve currency, and in the event of some really distorted disorder in the monetary system, the dollar will eventually eat up every single other currencies on the planet, and it will spike up. It would lead something which is really related to it, like bonds, especially U.S. bonds and treasuries, up in value, which has a lot of tie to it. How the system is framed and built up around all this structure about the euro-dollar system, the repo and reverse repo markets, and everything is basically tied to the dollars to the T right now. Because even if you think about positions which are built up in risk on assets, the way you fund that those positions, you need dollars to do that, and there is a good relationship in between the collateralized system that you have and the importance that the dollar is taking place in those mechanisms right now. So
Yeah, so let me
it's
slow
just
you
a
down.
theory.
You said a lot
It doesn't
there, so
have
let
to be
me slow you
truth.
down for a second. So I think I don't want to put words in your mouth, but it sounded like you were implying that the value of treasuries would go up as the the dollar goes up or the Dixie index goes up. Is that part of the?
Well, there is a little bit of a subtle nuance to that, because at the end of the day, a lot of people look at a Dixie and they think just because the Dixie is going up or down, the dollar is more is stronger or weaker. But the Dixie is just an index, right? Because it measures the relative strength of the dollar, compared to a basket of currencies, right? And we know that
Yeah.
60% of it is against the euro, and then we have another like 15-20% against the yen. The pound, the British pound is another tiny majority of that, and then you have all the other currencies. But there are other currencies which are not included in the index. So you don't see like Brazilian real included in the index. So
Yeah, but I
it's
think,
just a tool, right?
but I just want to circle back to that because if you raise interest rates, right, the dollar and bonds are going to move in different directions, right? I mean, if I understand that correctly, the dollar is going to seek
Well,
yield, right? The Dixie, if you raise interest rates, the dollar is going to go up, but then raising interest rates kills the value of the bond, right? Like the actual value of the bond. So they're
yeah,
going to
that's
move.
why I think yeah, that's why I think interest rates are gonna go down.
Well, yeah, I mean,
Mhm.
it's hard to say, which direction they'll go. I just, you know, I just see currently what we see is, Dixie is just going parabolic and then bonds are getting destroyed.
Yeah, I get.
So,
Yeah.
I
That
think
is true.
people correlate those two, right? Assume they move in the same direction, but they don't. They move in different directions, and kind of. So I think we're kind of talking on different planes because I think what you guys are talking about is the dollar, right, and deleveraging events, and
Yeah, I mean a massive
so
deflationary event, the leveraging event. Yeah.
yeah, so if and what you guys have correctly analyzed is that if the whole world is over leveraged, which they're incentivized to do in an inflationary system, right? You're incentivized to embrace leverage because if you don't, you lose. So it creates an
Yeah.
environment where people are over leveraged, and then when you have deleveraging events, then there is a dollar shortage because people just can't meet their liabilities. But it doesn't mean that
Yeah.
there's like a shortage of dollars in the system because, at least from my perspective, right? I think of like the monetary supply as debt, right? So debt and money are the same thing, at least in our current system. And the way you mine,
Well,
like
it
if you think about Bitcoin mining, right? And the way you mine dollars is by issuing debt. It's like the mining of the fiat system, and that's how you.
well the way yes, yeah, the way you actually mine new dollars, it's via the commercial banking system and the extension of credit.
Yeah,
So
exactly.
I
So
guess
credit
that it's
expansion,
the other phase of the yeah.
credit expansion, and expansion of the money supply, for all intents and purposes, is the same thing. And I think that's like a
Yeah,
helpful.
yeah, I guess the only subtle difference could be that, when you see credit expansion in the commercial banking system, that's money printing. When you see reserve bank reserves expansion, that's not money printing because those are not money.
Yeah, but if bank reserves are expanding because they're taking U.S. Treasuries, right? Those U.S. Treasuries have to be issued, right? And that's credit issued, right? It's an obligation, so it's that's more
Well,
debt.
when the Fed create a bank reserve, they are actually pulling out liquidity from the system because they basically pull out a treasury, which is a tradable asset, a negotiable asset, and they are replacing that with a reserve, which is not tradable. It's not negotiable. It cannot leak out in the open market. It cannot leak out in the real economy. It could be used as a quote unquote currency in between the commercial banking system, so in between one bank and the other, but it cannot leak in the real economy, at
Right,
least,
but right, I see what you
except
mean,
marginal events. But
but I think it's important. And again, this is just my opinion. Well, kind of, but
oh yeah,
you know,
we all have our
but so what you're saying is true, but the inflation has already occurred prior to that point, right? So
yeah,
at the point the
and the
Federal
inflation.
Reserve buys the bond, I think you've identified a correct dynamic, right? Like it's taking that off the market and putting it in reserves where it's off the market. It reduces the supply in the market. But I guess my point is that the inflation has already occurred at that point before that action is taken. Because if you start at like the beginning, right? The Treasury, how does the U.S. government finance its spending activities? It issues debt. it issues treasury bonds, and then it spends, that money immediately.
Yeah, the point is that, I mean, I get the point. It's kind of logic to think about that, and trust me, I do really. It took me a little bit of time to kind of wrap my head around it, and I totally agree with that, because naturally you're brought to think that, I mean, you got an entity which is the U.S. Treasury Department, which is basically issuing these title with these treasuries, right? And they're doing that to financing their activities in the real economy. And there's no doubt about that. They're issuing debt, so they're basically getting money, and the Fed, buying primary dealers in the commercial banking system, they're buying up those treasuries, and so they're giving them money. But the problem I see is that, if you are the treasury, right, and if you're allocating those money to some real activity, the very second those money hits a bank deposit account in the commercial banking system, guess what the commercial bank will do? They got liabilities. They got a new liability on their balance sheet. They're gonna be willing to offset that liability. So we get back in the QE fallacy narrative, because if they have a liability, they're gonna be willing to transform that liability in an asset. So
So would you agree
again,
that, like,
the whole
when
process starts
when you
back again.
say quantitative easing, right? My definition of quantitative easing is just when the Fed buys treasury bonds. Maybe that's not a correct definition, but
Well, yeah, no, I mean, they essentially buy up treasury bonds. The problem is that by doing so, they create a bank reserve. So, I mean, if you are a commercial bank, right, and you have these treasuries, and you have bank deposits from your customers, right, and at a point, you there is this QE, right? And so the Fed is buying up treasuries and bonds and what have you. So I guess the point is that you need to think that if you have something on your balance sheet, like a treasury, right, which is an asset for you, if someone, which is the Fed, is buying up that asset from you, they are basically buying up from you an asset. So they are removing an asset from your active side, of the balance sheet, and they are replacing that with another active. How do you call it in English? Another active element of your balance sheet, which is a bank reserve created by the Fed. The problem is that they remove something which is an asset, the treasury, which is tradable, which can be actually sold and bought, right? And they are replacing that with something which is not tradable.
yeah. So I think what you've identified is the strategy that the Fed uses to strengthen the dollar, essentially, and
I guess
of course they have.
I guess
Yeah, I mean
the,
they purposely design it that way to strengthen the dollar because they do want to strengthen the dollar, right? Because that's ultimately their tool that they use to control the world, really. And
no, I guess it's not just about controlling the world. I mean, yeah, we could go down a rabbit hole and maybe start to bring on something like conspiracy theories where the US want to dominate the world or what have you. But I think, given the fact that the monetary system right now and the current system globally, it's structured like, around the US being the superpower, both military, financially, what have you. But the problem for me, it's not about that. It's about the financial aspect of that. Is that we are a global system which is based on dollar, right? So in order for things to function, although they are malfunctioning, but they need to keep on functioning this way. And we all know that the system, it's not the best. It's not really optimal, but up until the point it can function, it's still something we can work on. And sure as hell, after World War II, it was still something that actually granted granted, global growth, economical expansion, and whatnot. So I guess what they were trying to achieve is, strengthen the dollar. So United citizens and United States, right, businesses would be incentivized to, buy up stuff from, foreign suppliers, because this way they could export dollars, which means export inflations. Because if you spend dollars outside the US, you're actually exporting inflation to the rest of the world. And in exchange, you're actually receiving goods and services or what have you. And,
Yeah.
other
So
countries are basically happy because they're expanding their economies as well. So everyone is happy as long as you can kick the can down the road. I'm not saying it's optimal. I'm not saying it's gonna be like that in, for the rest of times, but up until the point it works, it works. So I guess that was the main purpose they had when they
let's
elaborated
just
QE.
start from the top. Like if the inflation really comes from the government spending, right? And every government's doing it. Um, I really only focus on my government, but
Yeah, sure.
other governments are spending way more, right, and going in further into debt. But the U.S. government, it's like hard to how do you compare? But the way that inflation really occurs is through that vector, right? Through government spending, because they're spending money that they don't have, that doesn't exist. So they're stealing from the future of their citizens by issuing new debt. And the new debt is the way that the money supply is inflated. So if the US Treasury,
Into taxation.
yeah, so
What?
taxation wouldn't necessarily be inflationary, um, but yeah. But the prime mechanism that they do it is, like, say the U.S. government during COVID, right? They issued $4 trillion worth of treasury debt or treasury bonds, and then they used that money and spent it, right? That money went primarily first to government contractors. So government contractors are like the prime benefactors of the what's called the Cantillon effect, which means people who are just positioned close to that issuance of new debt. But then it goes from there's other people, other major corporations got some of that money,
But
but
yeah, that's very interesting. Yeah.
so what you're talking about is the Fed it has strategies in response to that, and they're saying, okay, well, if we have massive Weimar Republic inflation, runaway inflation, we lose all our power, right? If the dollar goes to zero, we lose our power. So we have to have strategies to counteract that, counterbalance. So what you're describing is a counterbalance to
Well, the Fed was established just to fight that, and the Fed is an anti-inflationary institution. They are supposed to fight inflation, not they cannot
well,
spur inflation.
if
They
they're
don't have the
not,
tool.
I mean, when they're buying trillions of dollars worth of treasury bonds, that's the most inflationary thing you can do. But yeah, right now, like, they're not contributing to inflation. Well, they are contributing to inflation because they're still buying treasury bonds, even though they're reducing their purchases. They're still
The,
have
the only
very
the
high
only way
purchase.
the only well, I guess the only way they could really spurge inflation as a Fed monetary policy, it would be actually, you know, selling out those bonds and return the actual cash to the banking system. And at the point, they will actually float the economy with cash. But anything else they have done in the last 15 years, it's not floating the economy, the real economy, with
Yeah.
cash.
So this is
They
kind of
actually did the opposite.
yeah, this is kind of tying into, like, my macro thesis, which is, think about, like, the government has to finance itself, right? And with their debt burden, and it's really important to understand the debt structure of the U.S. government, because you realize, like, they have to finance themselves, right? That's the whole that's going to govern the monetary system. and the only way
Yeah,
they
they
can do
basically
that,
issue short-term treasuries to refinance long-term debt. Yeah.
the only way they can do that is to issue more debt, which means that interest rates they have a natural cap, right? And I'm not saying that interest rates can't rise, but people like to talk about, Paul Volcker and how he rose interest rates to 20%. That's just
Oh yeah.
not, it's, I hate to use the word impossible as a trader. I try to
Oh yeah, yeah. I
veer
got,
away
I got,
from,
I got what you mean. Yeah.
but the reality of the situation is the government would go insolvent just based on their debt structure around 3%, 3.5% basis points in interest rates.
Yeah. I mean,
It's
so
just
you
not,
see, so you
that's like the
see, yeah.
cap, right? You
So
could,
you see why I'm
yeah.
saying interest rates are due to get down.
Yeah, I mean, they could, I will admit that, there is some room for interest rates to go up, up to that 3-4% level, but it, it it's one of those scenarios where as you approach that level, the instability of the system and the inherent risk is very difficult to predict. So you may think, like, if you analyzed it, right, like you may think that the cap is at like 3.5 or 4, but something
Well,
happens at like 2 or 2.5 that you didn't expect. And
I would,
yeah.
well, personally, based on my very little experience and very little study I've made, but I would say that no matter what the Fed decides to put, the federal funds rates at, the problem would be always the repo market, because I guess the Fed is always ahead. They're lagging, and what is really important is establishing the repo market, because you have this amount of collateral, which is again every single day, is negotiated again and again, and at a point, it doesn't really matter what the federal funds rate is it's set up. If you cannot find a decent amount of level where you can refinance your leveraged position, your margin positions in the repo market, like a lot of hedge funds or pension funds, insurance companies, they do that every single day. If you don't have a balance there, because if you lack collateral, you're not gonna be able to do that, because the haircut you're gonna suffer, it would be so much painful that you're gonna have to wind up positions, leverage position, and at the point it doesn't matter what kind of interest rate Jay Powell is setting, because the repo market is gonna do the work for him. You know,
Yeah, but
sometimes it looks like he doesn't have an idea of all different dynamics at play. He's looking at it like a child in his own bedroom, and he's thinking like everything in the world is confined to his own bedroom. But there is a huge and wide world outside, and he
yeah, I
doesn't
mean,
seem to acknowledge that.
so important thing to keep in mind is like, yeah, you might see like hedge funds blow up or different companies even blow up, but there are certain institutions that they're not going to be allowed by the government to blow up. Like pensions, insurance companies, right? Like and the government themselves, like they have those types of huge institutions, like a major insurance company. They have debt structures that the only way out of them is to refinance, and the government isn't.
Exactly. So,
So
the point of failure is the cost of that refinancing, right?
yeah, I mean, well, the only way to do that, right, is to like to lower interest. I mean, like if you just get, the more debt you have, you run into more structural issues as you increase interest rates, which I'm sure but yeah, so it you know the Fed, I think right now what the Fed is doing is they're kind of like feeling out feeling out where that is, but
Well, I think
yeah,
yeah, well, yeah, I guess it's what the Fed is doing right now. It's just trying to make up speeches and put out words which is just that, words, to kind of convince and spurge the general public or market participants to do what they know they're not able to achieve on their own, because they cannot do shit. They don't have any power right now.
Yeah. So
As if they ever had.
So what's really like ties into my Bitcoin thesis is it's like the inverse of bonds, right? You know, as we talked about before, the generational trade being long bonds. In my opinion, that's gone, and I believe what's replacing that is Bitcoin, and Bitcoin is what I believe, like over a period of time, will come to represent that in a portfolio, right? What bonds used to represent. And
I mean, I guess that is a fair argument. I mean, if you believe in an inflationary environment, well, holding something like Bitcoin could be a huge good play, right? Why not?
Yeah.
So I guess, but essentially any other type of asset, if you got real inflation, basically every other asset should go up in price. So if you're holding something which is less liquid and much more volatile, well, it should expose you to a general, much more beneficiary upside potential.
Yeah, and if you just follow along that thesis and just kind of, I know it's, I mean, it'll be revealed in hindsight, but right now it's like an opinion, but just assuming that opinion's true, like bonds, let's say bonds are going to be in a generational downtrend and the next few decades will be marked as capital flowing out of bonds, then the next follow-up question is like, well, where does that capital go? What markets does it flow into? And I think it's really unlikely that it flows into real estate, just because real estate is already so saturated and it's already trading at such a ridiculous premium. Does it flow into equities? I mean, equities has an issue with their cash flow models, right? Where if you have an inflationary environment, essentially the valuation of a company is based on their cash flow minus inflation. I mean, obviously there's more to it, but
yeah,
that's really at the fundamental level.
That's true.
So if you have an inflationary environment,
that's true.
It really fucks with all your equity investments. Okay, so it's not a favorable environment for equity. It's not a favorable environment for bonds. The natural thing it seems like an environment for commodities. Like a commodity market, like a proper commodity market.
Like you mean gold, silver, copper, something like that?
Yeah, exactly. I think that's
something which has a real use case in.
Yep, 100%. Yeah.
So we could extend that to agricultural commodities like soybeans and corns and sugar, coffee.
Right, and it's like yeah, exactly, a commodity market that has no tie to inflation, really. I mean, it does in the sense that inflation raises the value of the commodities, but their valuation isn't based on cash flow or interest rates or anything like that. So in that sense, probably do see a commodity market. That would just be my opinion, and it ties.
Yeah, well, but I mean, it
ties into the way
it's not bad because
Bitcoin,
there are.
What is, like, an interesting question is like, what is the fundamental price of Bitcoin? Like, if you think on a fundamental level, it's essentially the cost of production of Bitcoin, which is the cost of mining.
Yeah, I just reading that it was yesterday, right? When I reading that, you can quantify, we were talking about proof of work against proof of stake, and I was writing that with a proof of work you can actually quantify kind of the value of that because you have the energy which is needed in order to mine a Bitcoin, right? Do you remember that speech, right?
Yeah, yeah.
So yeah, again, I would tend to agree with that. Yeah, but again, if you, I mean, if you start to go down the road, it's like somehow acknowledging that it's not a currency, it's more like a commodity,
Yeah.
or maybe not.
Well, yeah. So just going further down the thesis, the way I think of it is monetized energy. And if you think of energy as a commodity, then yeah, it's a commodity, like oil or
Yeah.
natural gas. So
Because my biggest trouble with Bitcoin has been this definition about cryptocurrency, and I don't really think it's a currency. It's not a currency. For me, no, it's not.
yeah.
And we could keep on talking about that if it's convenient or inconvenient that it is a currency or it is not. But let's just
Well,
let's just stick to the fact for a minute,
so
just
just to
assuming that for
pause
me
you
it's not
for
a
a second,
currency.
that that following along with that thesis of tens of trillions flowing out of bonds looking for other markets, they don't care if they're not looking for currencies, right? They're looking for investment
Oh,
opportunities.
they are looking for yields, of course. Yeah.
Yeah, but they're not necessarily looking at they're looking for an investment, so they wouldn't really be concerned with the fact that any currency issues surrounding Bitcoin. That wouldn't be a thing that
Oh,
affects
yeah.
their
I
decision.
get. Yeah, I get the point. Yeah.
Yeah. So anyway, another like corollary of that is that if you think of Bitcoin as monetized energy and that its fundamental price is essentially the energy cost to extract it from the network is like the fundamental price, then it's hard to imagine an environment where energy prices are rising and the price of Bitcoin it doesn't also rise, right? And again, that's just my opinion, but
Well,
I think
I
if you see a
mean,
market with energy prices rising, then Bitcoin naturally rises in line because it's monetized energy.
yeah, I would assume that's correct. I mean, if I need to spend more to mine one Bitcoin, sure as hell I wouldn't sell it to less of a price that I spent to actually produce that, right?
Yeah.
But the miners don't set the price. It's the market who sets the price
Yeah, I,
to upfront
and
demand.
yeah, I was just trying to get there because maybe I'm going down the tangent, but again, it looks to me, getting back to Bitcoin, like I was reading some comments in different servers, not our own, but I was seeing this stuff going around, and people were saying, no, Bitcoin it cannot go below like 25K because at that point it would be anti-economical for miners to mine it, so they won't allow that. And I was like, okay,
It's gonna go below 5K.
and I was
Well,
like, that sounds a lot like 2018 where they were saying miners won't allow Bitcoin to go below 6K.
so
And I mean, for me
so
it's
yeah,
strange to
I
think
think
about that.
that's another scenario where both people saying that are right in one sense. I think it's very common misconception to discount mining, right? Because miners do have an effect on price, and they do have a fundamental
Well, but
impact
they
on
are net
price.
sellers, right?
Well,
Exactly.
well, it depends on their organization, but essentially, what you see is like when you see like massive sell-offs in Bitcoin, mining gets extremely profitable. And to be honest with you, like I'm not sure exactly why that is. There's probably some higher level math above my head, but
Oh yeah, mine too,
there is
honestly.
something there's something at work in the network where when you get massive sell-offs, like miners just become incredibly profitable. And
Might have
No.
something to do with the hash rate going up, or the numbers of transactions,
well, the hash
something
rate,
like that.
I mean,
I don't
a lot of
know.
the hash rate would decline, so it would assume that
Oh,
people who,
yeah.
so
Okay.
you get what's, when you get those major changes in hash rate, you'll get a lot of capitulation among miners. But then like the miners
Yeah.
who are able to remain profitable and avoid that capitulation, then they like consolidate market share and their profitability goes way up.
It's kind of strange and it's really interesting. I do really like this topic because I do remember back in 2019, I guess it was, when I guess all of us, we were basically spending the majority of our times in Crown server, and there was this discussion about mining and what do miners do, how they can remain profitable, and if they are sophisticated enough to remain profitable over the long term. And he was bringing up these thesis about it's like it's not anything different compared to what if you think about the corn market. If you think about how and why futures contracts have come to life, it was just an hedging mechanism to the producer, to be hedged against any other type of variables, like, in between the times they were harvesting the crops and then selling them on the open market. So I guess, to some degree, we could kind of try to extrapolate the same parallel in between miners and what they do with the bitcoins they mine. Because, naturally, by the second you mine a bitcoin, you are an owner on a bitcoin. So you are running an operation which is based on mining bitcoin, and the bitcoin you mine is the end result of your operation. So naturally you don't want to lose money on it. So you would be naturally oriented to either sell that at market, or going short on the future to hedge your position, right?
Yeah, so I'm sure miners are active on the futures market because exactly what you just said. They're inherently, exposed long just from the nature of their operation, but they're
Yeah, yeah.
also exposed long in a way that they don't experience the same volatility you or I do who are holding Bitcoin, right? Because they're constantly
Oh
averaging
yeah, because
cost basis, and that
you
ties
mean
into what I
yeah.
mentioned about
Okay.
earlier, where when price, like, you get a capitulation in price and price declines dramatically, there's like some kind of quadratic equation effect where their cost basis just gets exponentially lower as they mine into those scenarios. And again,
but
it's
but
I don't claim to
the
understand how that works, but it's something I've observed and noticed. Like if you look at,
no, but I mean, the maybe the cost of operations go lower because when you got that capitulation event, the hash rate goes lower. So the cost of actually mining a Bitcoin, it's lower. So it
yeah,
could
and
be something like that.
there's a whole lot of things that happen there, right? Because like the
No,
hash
I'm just
rate,
asking because I'm wondering about the dynamics. I'm trying
yeah,
to understand.
yeah. I mean, like there's like one thing that would come to mind as well is that like if you have a major capitulation, the hash rate declines, then as miners capitulate, then all of a sudden the market has a huge influx of mining rigs, right, which drives the price of mining rigs down. Now a company can
Oh yeah,
step in with
yeah, that's
capital and
true.
acquire a ton of mining rigs at
That's
low
true.
cost. So there's a lot of different stuff
Oh,
like that that sets the market that we don't really, unless you
yeah,
like
and
are a miner, you don't know that.
another thing could be that if you got like a huge crash, a lot of miners, maybe oh, well, a good amount of them could be taken out of the market, but those which are remaining, since the hash rate is going down, they could see their cost of production going down. So they are actually seeing their margins going up.
Yeah, yeah, definitely. Again, it's an
Yeah, so
area.
it's a very interesting dynamic. Yeah, it's absolutely fascinating. Yeah, absolutely.
Yeah, I don't claim to understand it, but I have, I probably spend more. It's like one of those things where I definitely spend more time researching it than most people do, but I also don't, I'm not, I don't understand it the way a miner would understand it,
No, me
or
neither.
really have, grasp to make a tradable idea based off it.
Okay. By the way, Roman had to split because he's got some sort of family meeting or something like that.
Oh, gotcha.
Anyway, but yeah, no. Anyway, for me, these miners dynamic, it's really interesting. And as you were saying, it's not something that you could trade off. But I guess as a knowledge standpoint, it's worthwhile to dig into because it could be very interesting to understand. And it's to me it's like any other market because uh at a point Bitcoin is not that different from any other market. It's still a market, so you got a lot of different participants, and a few of them are in here just to speculate. And you have people which has really interest into having the network keep on going. So it's always fascinating for me to kind of dig in all the different dynamics, even if I don't use them in my daily routine. But I guess it's a good exercise, and it can really makes you uh, more aware of the dynamics at play in the market you are operating in.
Yeah, I think it's just a dynamic that people they don't necessarily link Bitcoin with the energy markets like that. But like I think like if you see adoption of Bitcoin, it's already revolutionizing the energy markets. And one interesting thing is like you notice that like Bitcoin miners tended to pop up in like these communist countries, right, with central planning, like China primarily, but also Russia. And well, Russia's not communist, but very heavily centrally controlled, in like the Kazakhstan, areas like that. And the reason why that is because central planning is so inefficient that in China they naturally like build these dams like where nobody's near them, and they can't even. It's just extremely inefficient, just because central planning is inefficient, and Bitcoin stepped in to capture that inefficiency, right?
Yeah, I guess so. Yeah.
So it
It for me it's the natural tendencies of the market. It's trying to get there and fill in those inefficient spaces.
Yeah, and the other thing is like I don't know how revolutionary advancement in energy technology would affect the Bitcoin market. Like, think about like, I know when I was in college, I was studying environmental engineering. Well, not studying, but I took a few classes on it. And
Well, lucky you.
yeah, and my professor was saying he's like we're very close to nuclear fusion reactors, which that was like 10 years ago. And
We're not there yet.
yeah, but I'm saying like how would like if nuclear fusion came out, like it would revolutionize energy, and all of a sudden you would have like so much more abundant energy. It wouldn't it'd be crazy. Like you would have 100 times more energy than you do now. What would that do
Well,
to
I
the
mean,
Bitcoin network? You know what I mean?
I think it's pretty fair to say you've seen that in history. Like if you think about the transition from coal to petrol, and now we are talking about hydrogen and nuclear. So I guess energy it's the core of everything in the economic system because everything is based on energy. If you cannot have energy, you don't have shit. So every type of new discover, new quantum leap in energy production, it would be something which hugely gonna affect every type of market. So again, I think that holds a lot of truth. Energy is the core of everything.
and it would ultimately make the world much more efficient, and it would, vastly improve the economy, which naturally would mean that people's purchasing power would increase, right? If the efficiency of the economy goes exponential and people are exchanging value in a currency that isn't being exploited, then that efficiency will be reflected in the value of their currency, right? The increased purchasing power.
I mean, yeah, that is another very interesting topic because I think you more than a lot of other people, you kind of agree with me on this topic that, the current system we have right now, although it could be, perfectionable, it could be tweaked a little bit to be much more efficient, but in any case, the way it's working right now, it's some sort of a, well, I'm not trying to find nice words, but it's some sort of a robbery toward the working class hero, right? So
yeah, totally.
naturally,
Yeah.
so naturally having something which is kind of tending more towards efficiency and wasting reductions and something like that would be beneficiary to all these large majority of people which are the more affected by these inefficiencies in the current system.
Yeah, this kind of opens the door to some of my probably more unorthodox beliefs, but
Yeah, I'm open to unorthodoxism. Yeah,
but I
hit me
think
up.
I think that you know with Bitcoin and the Lightning Network, just what I've seen on it, like I think central banks are totally irrelevant now,
Yeah,
and
I agree with that. They are irrelevant.
they
Yeah.
don't know it yet. We're like
Yeah.
in the
Well,
we're in a
you.
Bitcoin, and the interesting
Yeah.
thing about it is the incentive structure is such that they'll be incentivized to embrace Bitcoin, and but that won't do anything to protect them from being irrelevant and disappearing.
You know, at this point, I guess you kind of understood my general point of view. So, I totally agree with you that central banks are irrelevant, and regardless Bitcoin, they are irrelevant in the even in the current monetary system. So having some sort of a breaking through technology or some sort of a financial revolution that would just accelerate the process
Yeah, I
by
mean,
which they will become more and more irrelevant. So yeah,
people
I
sort
agree
of
with that.
we tend to like get in the weeds with things, and when we get in the weeds, we sort of lose some of the things that are actually pretty obvious. It's like if you read the Bitcoin white paper, like one of the first sentences in the white paper is that there's currently no way to exchange value without a trusted third party intermediary. And that's like huge. People
Yeah.
read that, they don't understand how big that is, but that's
Well,
essentially
well,
what banks
I guess
are, right?
Canadians actually understand that pretty well right now.
But right, but I'm saying, but that's the service that a bank provides, is the role of a trusted third party intermediary. So
The,
if you remove the need for a trusted third party intermediary, you've removed the need for that service.
yeah, I
The
absolutely agree. But on the flip side of that, as I was saying in the beginning, I like to take things on a very pragmatic side of things, and I think that it's all good in theory, and I totally agree with the theory, and I totally agree that it would be a much more uh, whatever you want to call it, fair, democratic type of solution. But for me, the problem is it's still humanity, and if you have some sort of a system that would actually grant every single person on the planet the same type of you know uh, ground starting point of how can I say that? Let's say making all people equal, right? If you have something like that, you can bet that there would be someone on the other side of the spectrum fighting against that. Because, let's face it, as humans, we tend to have this natural instinct to prevail on other individuals. That's just evolutionary. It's history. We are
Yeah.
designed that way.
Yeah, no, I agree with you, but I think, and I think, that's just part of human nature. But if you have like a situation where Bitcoin is adopted and utilized globally, then those people or that desire to control people will have to be expressed in different avenues, right? I mean, there's still
Yeah,
avenues where that can be expressed, right? Like there's still other ways to exploit people. Still,
I would say
you know what I
that
mean?
at least they would have to tone down a little bit.
Well, I'm sure you can still figure out ways to exploit people even in a purely Bitcoinized world. I mean,
Yeah,
you
most
can't
likely.
underestimate
Yeah.
their creativity, but
Yeah, I like the. I mean, if you read some papers that the IMF put out, they are very creative.
yeah, I
That's for
mean,
sure. Yeah.
it would just be much harder to exploit them financially. But you could still, I mean, it wouldn't change the nature of propaganda or stuff, other things like that. You could still utilize other tools.
Yeah. Again,
But
and that's a very and once again, that's a very good point. And uh, I'm trying to get back to it the more that I can, because we can stay here and discuss about traditional finance and new revolutionary finance, Bitcoin, or as Roman was kind of bringing on these altcoins, these new mechanisms and whatnot. We can come up with a lot of different ways to revolutionize the current system, but beyond the mechanics of the old system. And no matter how many ways you could find to change it, to reinvent that, it's like at a point you're always gonna get that part of human component, which is really the huge and the real flaw of all the system. Because as any other thing in life, I think even in a perfect mechanism, the only part that can be subject to failure is the human component of that. You know, like if you have an edge in trading, right? If you have a strategy which is mathematically and statistically is good, so if you cannot make money, there must be something to it. What it is, it's a human component.
so
Is
is there
your
something
discretionary decisions.
like something in society specifically that you're like thinking about when you say that?
I mean, yeah. Again, it ties back to what I was saying before when I was saying people naturally tend to look and to seek for someone to tell them what is right, what is fair, what is much more convenient for them. Because I think, and maybe I'm too pessimistic about humanity, but the problem I see is that I see that every single day in my life, right? It's like I'm circled, I'm surrounded with all this bunch of people, and everything they try to do, it's trying to find someone to put the blame on for something bad which is happening in their lives, right? So I guess, I mean, I do live in a town which is like 60,000 people, right? So it's not huge, but if I can see that in my small town, I can just imagine how it could be on a larger scale. And since everything is fractal, like price is fractal, humanity is fractal, psychology is fractal, right? So I think at a point, you know, people will naturally tend to seek something or someone to tell them what is true, what is not true, what is fair, what is not fair, because it's much more comforting that way. Because you don't have to make up a decision for your own. You don't have to take responsibility. You know?
Yeah, yeah,
And
definitely. I think.
that scares the shit out of me, to be honest. But that's the way it is. That's just human race, you know.
Yeah, and I guess you could still. I guess the difference is like in a Bitcoin, like at least from the financial attack vector, you would have to. You can't just coerce people and steal their money outright. You would have to use more subtle tactics, right? Like you would have to scam them essentially, right? And
Yeah,
because people
to
can,
convince them. Yeah,
yeah, people could voluntarily, give you their money because you scam them, but
yeah,
it just they have to be much more persuasive, and they can't outright take it, so it's less.
but
There would have to be
yeah,
some element of compromise, or even if they're being scammed, right? There would have to be some aspect of it that at least appeals on a basic level to their self-interest, right? For them to go along with it. And
yeah. What would you trade for security
yeah,
or
exactly. I mean,
safeness
yeah,
or
yeah, that's a good point.
whatever
Yeah,
you want to call it? Because that's the point of every authoritarian regime in history, right? You know.
yeah, it's really interesting because if what I'm saying is true, it's a big capital if. But if it is true, then it's really an exciting time to be alive, because
Oh, absolutely.
the
Yeah.
like I think it really pulls the legs out of authoritarianism. Like I just
Yeah.
don't see how an authoritarian regime can operate under those conditions. Maybe they will surprise me, but it just from an operational perspective, it just seems so much more difficult that it's for all practical purposes just impossible. But again, I don't know. I
Yeah.
mean,
I mean, it's all fair and good. I, I, I would tend to agree on that topic. If you can build up something like these kind of framework, these new revamped monetary system, financial system, well, a wealth-based system that we are trying to establish, it could be much more difficult to kind of to overthrow, I guess. But to some extent, again, maybe it's just me. Maybe I'm too of a pragmatic person. Maybe I am too pessimistic. But the problem I see is that somehow I always tend to believe that if there is some flaw or some point of weakness, you know, humanity will always try to find those weak points and try to exploit the system, no matter what type of system
yeah,
you're trying to build,
I,
you know,
I, I just think
and
it's
it's gonna be a perpetual war.
yeah. I just think like in that scenario, in that Bitcoin scenario, basically, you have these institutions that are really like the idea that institutions are going to rapidly adapt to that change is just not. It's not according to their nature, right? They're these giant bureaucratic organizations that don't change. So they're probably going
Yeah,
to collapse. So you're probably talking about the collapse of like major institutions,
yeah, it could
which
be, it could
sounds
be.
scary to some people, but it's not. It's only scary if you frame it that way. Like if you, I think a good like a positive spin on it would be like the Renaissance, right? Like that, the Renaissance in Europe, because then there you had a fall of an institution, right? Like the Catholic Church is still around, but they're not the same as they were, right? They're not.
Yeah, man, that is a very delicate point for me as an Italian, because I mean we got the Pope right in here, so it's yeah, I mean I don't even know if I want to talk about that, because I got a lot of very controversial opinions on that. So
Uh, well,
I it's like I'm not I don't say people don't have the right to be religious. I totally respect everyone who's got religions beliefs or whatnot. It could be, they could be Christians, or you know, um, they could believe in Buddha, they could believe in, Mohammed, whatever they want. It's all fair and good. I just think that having something which could interfere with the, you know real political landscape in between your own state, it's kind of a fucked up. It's really not something you want.
Yeah, I just think there's a lot of parallels between it and the hypothetical Bitcoin situation we created. So, like, if you think about, essentially, and again, this is the historical church, right? It's not talking about the modern church, but the historical church, basically siphoned wealth off the population, right? And was like, had a parasitic relationship with the population, right? You had to
Yeah.
pay a certain amount, and if you didn't pay, then you fall out of favor, and then people start saying, oh, is he a heretic, and then you might die. You're like,
Yeah, but it was like, I mean, you pay me that amount of money, and all your sins will be forgiven. It was like that.
Yeah, exactly.
That's where we had Martin Luther in Germany, bringing on these Protestants. What's the word?
Protestants,
Protest.
yeah.
Yeah, that was it. Yeah. So yeah, yeah, even the Christian religions saw their own decay in that period. Yeah, I guess that's true. Yeah.
It's also a parallel because it shows, like, not necessarily the collapse of institutions, but their power, like, was stripped out from under them. And in that scenario, you had essentially what the experience was like for, like, the average European in that time was that no one had total dominion over them, because at that time, when the church diminished in power, they were the state started fighting them, right? So, like, the kings started fighting the church, and there was a period where they were on equal footing, and they were expending resources fighting each other, and so they didn't really have dominion over anybody, and so people were, during that time, were able to, basically keep portion of their own wealth and express themselves more in line with their own individual interests, and you saw, like, a flourishing of culture. So
yeah, I like you are so educated about European history. I like that.
yeah, I mean, well, yeah, yeah, I mean, it definitely is interesting. I probably know.
Oh, well, it's not very common. Coming from an American citizen, because naturally, the tendency I've seen is that you like, quote unquote, but usually Americans tend to believe that America is all there is. So
yeah, they definitely tend to focus on. There's an obsession with, like, World War II, especially, like, Nazi Germany. I don't know why, but
oh yeah,
you know what I mean? Like, that's what people.
Yeah,
want.
I mean, can I? Yeah, if you allow me to go a little bit out of a tangent, right? Because just because you bring on World War II and the Nazis, right? I was just about to ask. I'm hearing about a lot of different, kind of declarations and statements and what have you, but given the fact that you as an American citizen, right? When you hear different people, like, for instance, right, Putin saying that he's going to fight the Nazis, and then on the other side you hear about Zelensky talking about, no, the real Nazis are the Russians. So I mean, here in Europe we have this tendency to kind of be scared, because of course we don't want the war to come near our borders. But since you are very far away and you can have a much more detached view on that topic, how can you see that, from the philosophical stand view? I mean, who is the Nazi in here? Right?
Who is? Well, I would say that they're first of all,
Yeah, the
everybody
narrative they are keeping on.
yeah, everybody has a different definition of what they mean when they say Nazi. The actual Nazis, if you wanted to find them, you probably need to go to South America because that's where most of them fled to after
Oh
World
yeah,
War
yeah,
II.
yeah,
I mean,
yeah. Like
like
Argentina,
real actual descendants of Nazis probably primarily are in South America now.
yeah.
So, but yeah, I mean, like everyone has a different definition of Nazi, but people, it mean, I think people just generally mean it to mean people who, I would assume, hate other races and believe in eugenics, but I don't know. Maybe people don't even associate that. Maybe they don't need to believe in that. I don't know.
Like because at a point, you know, I try to step away from politics as much as I can, but as any other person on the planet, I'm uh I'm sub I'm subject to TV because every time I wake up in the morning, I turn on the TV and I see the news, and it's like I at a point, especially regard to this current war we are having in Europe, it's kind of hard. It's the definition, the borders become really blurred, and I don't know because it's like at a point it's kind of a narrow. There are two types of narratives which are colliding against each other, right? So you got uh, the Ukrainians saying that the Russians are the Nazis because they actually invaded free countries, and they basically stepped in a sovereign country. And on the other side, you got the Russians. They are saying, well, it's not our fault because it was about NATO. NATO was trying to came up closer to our borders time and time again throughout history. So we felt the need to defend ourselves. So it's like, to me, at the point, it's like the chicken or the egg. Who's right? I guess nobody's right. But it, it's just an academic exercise, I guess. But the problem is that that is that it's got a lot of practical downfalls if you think about that, and I
Well,
feel that because
that's like the nature.
I live here.
That's the nature of war, right? I mean, it, like there. It's very difficult to emerge from a war as a pure entity, right? I mean,
Oh
maybe
yeah.
you entered the war, you know, as the good guy or the nobility, but sometimes the what it takes to win the war means that you have to, you know, do things that no longer
with
make you disqualify you from that position. So it's like a lot of times,
this,
in a war, it's like the who was
would
right
you
and
would you
wrong.
say that
Yeah,
would you say that in order to win the war sometimes you have to become the villain?
yeah, and it like
Because it reminds me a lot of uh Nolan, the night the Batman.
yeah, yeah, yeah. I mean,
Sometimes you have to live long enough to become the villain, right?
yeah. I'm just saying, like, especially when you have a long, drawn out war, it's sometimes it's like not clear what you're fighting for. It into well into the war or what the war is even about anymore. You know, it,
So yeah, again, so I'm trying to extrapolate a lot out of you just because you're American. So it's not. I mean, don't take it personally. I'm just trying to grasp, right? Uh, do you know anybody which is in the military forces, USA military forces?
uh, not really. I mean, I guess if you like look at like distant relationships, but I
Oh,
I'd have
okay.
to say no. Yeah, I don't really.
All right. All right. Okay. No, because I was trying to, you know, as a European, I'm kind of finding myself kind of in the middle, right? Uh, sometimes it looks like we are in the middle. We have these two superpowers, right? The U.S. on one side and Russia on the other side. And it's fucked up for us because on one side we kind of practically and definitely have some sort of a historical debt to the US because I mean you came in here and you liberated us from the Nazis. So honestly, we kind of hold this kind of a debt in your favor. But on the other side, if you look at the economical circumstances, we are kind of tied to the Russians because they are providing us with gas and petrol and what have you. So I guess we are in a really fucked up situation right now, and we are gonna pay the cost of whatever is gonna come next. You know.
Yeah, I think you guys are, the European Union in general is in pretty deep shit.
Jeez, yeah.
Yeah, I would say, yeah, I would. Like the way I look at like geopolitics is, again, like looking at the big picture. Really, the big picture is America and China. You know, you know, the
Would you discard Russia all entirely?
I just think they're not. Like the big narrative. Like when we look back in history, it will be America versus China. You know, and
Oh,
Russia.
okay. Well, so
Yeah. So
when
everybody
when
else
you
is.
when you say China, you're talking about the last 20 years.
Yeah, yeah. I'm talking
Oh,
about like
oh,
the
okay,
rise
okay.
of China. Yeah,
Yeah, okay, okay, okay.
yeah. Um, and because China, like their communist system and just like the Chinese, what that represents is totally different than like what America stands for and what America represents. And they're two like competing forces that it's hard to say which one, what how history will unfold, but
Hmm.
that will, there's a potential that China could, increase its control and it start exerting its values over the world.
But, at the same time, I mean, I totally get your point, but at the same time, uh, I mean, in my perspective, again, looking from, the point of view of an outsider, right? I would tend to believe that although and when I say you, I'm referring to the US and China, right? Although both of the parties have different interests, right? And maybe they are actually competing for, the role of world superpower or whatnot. But it looks to me like you have more in common than what really transpires because there is this some sort of a symbiotic relationship in between the two of you, especially from an economical standpoint, right?
Yeah, and that's a good thing, right? Despite what people say, that's a good thing, because it has
I guess
avoided
I
so many wars that would have happened otherwise.
exactly,
Yeah,
exactly. I was getting there, and I was just trying to refer to your famous quote that if merchants can pass borders, soldiers will. And I
yeah. It's
guess
it's not my quote, by
if
the way,
we
but it is one of my favorite
yeah.
ones too.
Yeah, because I was thinking like, yeah, I mean, we keep on hearing this narrative about China and the U.S. uh, going head to head, but they never seem to really do that. And guess what? Why it is? Why they keep on being maybe sometime and somehow they keep on being harsh by words, but in fact they are still very kind of friendly. It's because economically they both have a huge returns, and I was tied back into that that speech, that logic, because China, greatest exporter of the world, U.S. greater importer of the world. So, I mean, it's a symbiotic relationship.
Exactly.
You
Yeah.
both need
Yeah.
each other.
That's a great point, man.
And up until a point, this relationship it's maintained. Maybe and hopefully, we are never going to see an open conflict in between the U.S. and China.
Yeah.
Let alone Taiwan. But I don't know about Taiwan. That's some sort of a political issue that goes beyond my understanding. To be honest, it must be much more economical than political. But again, I'm not well informed enough to understand that.
Well, what you just mentioned is why I was so concerned about like the sanctions over Russia, and like concerned on like multiple levels, right? Because because of what you were just talking about, right? You restrict trade, that does not lead to peace, right? It leads to war and
Yeah,
conflict.
no, absolutely.
But
Yeah.
the other level of concern is that, my world leaders are saying that restricting trade leads to peace. And then it's like, whoa, okay, well, like, if they're that incompetent, what does that mean for everything
It's
else? You know?
it's a fucking other way around. Jesus fuck.
So it's like
I
multiple
mean,
levels of concern. Yeah.
I don't. Man. Sometimes it's like you've been kind of used to think that things have been played out, and all of the world kind of generally we have kind of established a way to get along, everyone with each other, just because we had this type of international trade relationship. And that was the only thing that was bringing up this sort of a piece, because it's like, maybe I don't agree with you, right? Ideologically, I don't have the same ideology of you, and maybe we tend to hold different different grounds. But as long as we can all make money, it's all fair and good. Everything is forgiven, right? But the second that you start to actually break those economic relationships, that's where things fall apart.
Yeah. So if you want to promote peace, you just promote trade. And this is so obvious. I don't get why people don't understand it. Sometimes it helps to like use a simple illustration, right? That like say
Yeah.
you and I are stranded on an island together, right? And there's no fruit on the
I
island,
love that.
right? There's no just I'm just laying out the premises. There's no
Yeah.
fruit. The only food is fish that you can catch off the shore. But I don't know how to fish. You're the only guy who knows how to fish, but I know how to purify water, right? I know how to take water that has bacteria and purify it, and you don't know how to do that. So in
We
that
can make an
scenario,
agreement.
we both need each other to survive. We need to trade, right? That relationship is way more secure than relying on our goodwill
Yeah.
and good nature, right?
Because at the end of the day, even if you think about that, it again, getting back to crypto or the current financial system, it's always an incentive mechanism. I am incentivized to give you fish if you can give me pure and potable water, right?
Yeah.
And up until the point that balance is maintained, we don't have any reason, to go to war.
Well, people like to use the term free market a lot, and it's used in areas where it doesn't belong, right? Like people describe like America as a free
I
market, right? Where it's just not,
uh,
right? You need,
I would, yeah, conceptually, I do love the concept of free markets. The problem is that there's no such a thing as a free market.
right. But if you go back to that scenario where we're on the island and you know how to fish and I know how to purify water, that is a truly free market, right?
That would be conceptually in this metaphor, yeah.
Yeah, because
But
there's
in
nobody to
reality, is not.
all a free market is people, the ability of people to engage in a transaction without any intervention, any third party intervention. That's all it is. And people complicate
Yeah.
the definition a lot. And if we're the only two people on the island, that is inherently a free market because there's nobody there that could even intervene just because they're not there physically, right?
But but I guess the point is that that could be, and it would be totally a free market experience, but just because there are only two participants, right? And so I guess when the system becomes more complex, it's much more easier to have interventions or interferences in that type of free market dynamics, right?
Yeah, definitely. But I mean, I guess it, it adds a different layer if the two people engaging in an exchange want that third party to be there and to arbitrate.
Yeah.
But then that's also their choice, their decision. But I think, to the extent that it's not a free market is when, two people want to engage in a transaction and, you know, that is
You know,
restricted or modified in some way.
just just to perpetuate a joke that I heard. I was watching. There was some sort of it was a press conference, and there was Nancy Pelosi on the stage. And one journalist kind of asked her about the gains he made on options trading or whatnot, something like that. And she was actually replying like, "Well, there is a free market. Just because I'm a speaker, it doesn't mean that I cannot make money on the free market." Oh, yeah, okay.
You gotta love it, right?
That actually makes sense, right? And I was like, okay, so if that's the current and right definition of free market, Jesus fuck, someone please go buy some nails in a Hummer and nail me to a cross, because we kind of lose perspective right now.
Yeah, it's
It's
pretty
like,
fucking ridiculous.
you can
It's like
you
laughably funny. Yeah, like I remember I was watching. It's like, to me, it reminds me of like I was watching a real estate show on TV, and some guy was showing people houses, and he's like, yeah, this is oceanfront property, or no, ocean view property. You just can't see it from here.
yeah, I mean, it's so finicky, right? It's so fugazi at the end of the day, right?
And
But
it's really scary to like think that like that one individual person is like making massive decisions that affect the whole world. That's scary, that
yeah, I
that's
mean,
frightening.
yeah,
Yeah.
if you think about that, if you start to realize what kind of a society cost it will have, yeah, I mean, you should really shit your pants, because basically what you are seeing, what you're reading is seeing, it's the society decay.
Yeah, I mean,
When
like think of, well, I always associate inflation with slavery, right? I mean, if if you have 100% taxation, right, then you're a slave, right? That's essentially what a slave is, right? At the threat of violence, right?
yeah,
If you have
it's
100% taxation at the threat of violence, that is slavery. So then, taxation is just a matter of, and inflation is a matter of degree of slavery, and that's why I link it to that. But if you think about, I guess my point I'm trying to land on is that people who are in a state of slavery, they have no framework to understand what life would be like outside of that, right? If you think about like slaves in like the American slavery period, like they have no way to conceptualize what a free life is even like, because their whole life has been in slavery, and their whole family has been enslaved, and like they've never met anybody who wasn't in that condition.
Yeah, and I guess to some extent, of course, not that you know not that bad, because at the end of the day, you know, thanks God, but we are not on that same level of slavery. But to some other extent, we are still slaves, because I mean, if you think about, I don't know about you, but I still retain a regular job, right? So I do realize perfectly that every time I wake up in the morning and I drive down to my office, I stay there for 10 hours a day. Of course, I make my job. I'm able, because I'm always at the desk, so I'm able to put on some good trades throughout the day. But to some extent, these perception, this thought about, yeah, okay, I'm working 10 hours a day to earn like 4,000 euros per month, right? And I'm basically earning something which is in the control of someone else, which could decide what kind of purchasing power this amount of money I'm making each month it's going to be next month or next year. So basically, I'm trading off my time, my sweat, my fatigue, my blood for what? For something which is decided on a higher level, and I don't even have a control about it.
Yeah, I mean, this
So
is
yeah,
like you're touching in the area of like where you might see some of the downsides of Bitcoin adoption. Like because of course it won't be
oh,
particularly
no. How so? No,
well.
no.
So
I'm not following. How so? Elaborate a little bit.
so I'm saying like a lot of like society, like the society we enjoy, depends on people doing jobs that they don't want to do, right? Like
Oh yeah.
nobody.
Okay. Like me. Yeah.
Yeah, yeah. I guess. I mean, I work an office job too, so I realize like anybody who works in an office and sits at a computer, you're in danger of being replaced by automation, no matter how complex your job is. Right? You're a computer jockey.
Yeah.
I mean, I'm
Yep.
not. I'm using that term disparagingly, only because I'm a computer jockey too. Um,
Yeah, but it's true. It's
but
true at the end of the
if
day.
you
It's
are a
true.
computer jockey, you can be replaced by automation, no matter how complex you
Absolutely.
think your job is. And
Yeah.
but the things that the society we enjoy is not really there by computer jockeys. It's by people doing like physical jobs that they wouldn't necessarily want to do, like sanitation and setting the power lines and stuff like that. And it's like, well, you
Oh
know,
yeah, yeah. Got it.
well, I guess you would just have to. I guess everybody has a price, right? And I guess you would at a certain price, people will do it. Maybe it's higher, but you know, if you pay people a lot to do jobs, like there's a certain point where they'll want to do the job. I just think that in a Bitcoin world, like you'll see people will have much more optionality, right? To the opposite of what you feel like, to the extent where like a large portion of the population will spend the majority of their time engaging in pursuits that they choose, right? That they don't feel coerced or unwilling to engage in. And it's weird that like we say, it's hard to say that, right? Because like you don't want to assume that about. But also, I'll just speak for myself. Like if I had unlimited money, yeah, I would quit my job. You know, I wouldn't I wouldn't show up to my job, right? It's a financial transaction, right? I show up because I
Yeah.
need.
Well,
Yeah, right.
I guess it's always personal, right? I mean, we're all here, and we're all trying to, to try to get on the other side of the rainbow, right? I guess because we wanna be free at the end of the day, right? I mean, I guess I don't know about you.
What's that?
Um, I don't know about Roman or what have you, but I think
So I'll
if
just say what I
we,
do. I work for a large bank. I work for Morgan Stanley, in a lending group. So
yeah, of course, but still, you have a paycheck, at the end of the month, right?
yeah, Yeah, I have a paycheck. Yeah, regular paycheck.
So so basically you are forced to show up at work every single day.
Yep. Essentially, yeah. I mean,
Oh, yeah. Again,
no, I'm
so
not like a consultant or anything like that.
no, well, I was just trying to make up a point where if you could have something which kind of allows you to shift to that perspective, and maybe making you much more independent, you know and being able to decide what kind of a schedule you want to have for your daily job, or how many hours a day you want to put in your job. That could be much more beneficial, because for me it's like I same as you. I retain a regular job, right? So I know that every single day I need to be at my office 10 hours a day, right? Now, let's just for a minute, let's discard the fact that just because I'm at the desk and I can have a computer in front of me, I can make trades and what have you. That doesn't matter. But unlikely it's not enough yet to allow me to quit that job and to being completely relying on my trading skills, because I don't have enough capital, or at least I don't have the type of capital that I would like to have in order to say, what, fuck it, right? But
Yeah.
the problem I see is that uh, every one of us which are in this game, or at least we have spent so much time to learn the game, right? I guess we are not just doing it because we want to be like billionaires, like uh, Warren Buffett or Elon Musk or whatever you, but maybe we are just doing it because maybe we don't really strive to be billionaires, but we just want to have our time back. Our ability to decide what to do with our own time, right?
Yeah,
Because for me
essentially,
that
yeah.
is.
Yeah, I think that's a big part of it.
Uh, when I started to actually commit toward this process to learn how to trade, it's like I know it sounds strange. It sounds a lot strange because every time I try to explain this story of mine to people, right? They always look at me like, man, you're delusional, right? You're crazy. I mean,
Yeah.
and they always kind of tell me, Jesus, you're gonna end up working for the same business, for the same enterprise for the rest of your life. So why are you
Yeah.
trying to escape that reality? And I
So
am
it's
like,
actually
no,
interesting you
I don't
mentioned
want that.
that because when you reach the point where like you are just trading and you're doing you're not working anymore and you have your time back, all of a sudden everybody's going to want to know your opinion on everything. You know what I mean? And only I don't know that out of personal experience, but I have a couple professional traders in my family, and
I mean,
that's what
man,
the experience
I mean, yeah,
they relate
you're
to
so
me.
lucky. You're so lucky.
Yeah, my uncle was a professional trader, and he told me he's like dude, like he's like, when I was actually making the money, when I was making the big bucks, nobody gave a fuck what I thought. They only wanted to
Yeah, I mean,
know my opinion
it is.
afterwards.
I guess it is very empowering because it's like I keep on I don't know if you are recording that. I honestly I don't give a shit, but it's just something that I think it needs to be pulled out, right? I guess everyone thinks that this business is it's all about the money, right? And to some extent it is, because if you don't have money to provide for yourself or for your family, whatever you, it doesn't make any difference. But once you reach the point where you have that, uh, it's not just about you know the financial freedom. It's like a thought freedom. You can be you can be free on a thought framework level, because at a point you don't need to bend the knees to a lot of different social dynamics, social behaviors. You can just say, you know what, fuck that. I don't subscribe to
Yeah,
that,
no.
and I
So
don't
you're
have
tying
to
into
play along with that.
a very great point. Is like a lot of times when governments do horrible things or implement policies that horribly affect people's lives, people naturally think like, well, how could the people do that? Uh, the human beings in there do that, and it's like, well, there's two things going on. One is that they're purposely distanced from the pain that they're causing, so that they don't
Oh yeah,
associate it with closely. And the other factor is, they have mortgages and kids, and they have no
yeah,
choice. You know,
yeah,
they what are they going to do? Take a moral stand and then like go home and tell their kids that they don't have a place to live?
yeah.
I mean,
I mean, it's really hard to. Yeah, I mean, can you imagine like looking at your kid in the eye and saying, uh, we don't have money to grant you this and that, but daddy has taken this moral stand and he has
yeah,
to live by his principles. So
yeah,
sorry, kid, but
yeah,
no,
exactly,
you're
yeah.
gonna play the ball, whatever it is.
And you're kind of
And
that
and,
like
it, and it's
touches on
sad.
like
It's sad.
the that touches in the incentive structure, right? Like the incentive structure could use a lot of improvement, right? Because you have a lot of people whose livelihoods are dependent on participating in this incentive structure that doesn't benefit people, it harms people.
Yeah.
And I think, like in Bitcoin, it's not necessarily like you wouldn't have to work, right, and do things you don't want to do, but like think about it now. Like we expend most people expend on average 40 hours a week securing the basic necessities of life, right? You could have a world where people are they only really need to expend 10 hours to secure the basic necessities of life a week, right? And then, okay, so you do those 10 hours, then what do you do with the rest of your time in the week?
While you leave,
Yeah. Well, I
essentially.
think a lot of people would do things I think that would be much, if you, the degree that you escalate that, right? People contributing time to things that they purposely choose. I think that the degree you do that, I think makes the world a better place. Because I think maybe I'm just an optimist, but I think people would express that in a way that's definitely better than the current
No,
incentive structure and in a way that's beneficial.
but
But
but I guess that's a very interesting thought, and it's a very deep thought if you think about that, because we just established that we both come from the same point of reference. We both have our regular job, and up until this point we are kind of trading on the side, right? So what you just bring on, it was kind of interesting, because just the simple question: if you could have the opportunity to trade for a living, you know, uh, maybe you need to be engaged with the market for like 1 2 hours a day. What would you do with the rest of your day? And that's a really interesting topic, right? What would you do?
yeah, it's different for everybody, right? I mean, it's that is where you get individual expression, right? Which is a good thing. There's
Yeah, I
no,
mean, by
which is
okay,
different than the spending it the other way, which is you have like you know
oh yeah, okay, but in these particular iterations, I was actually asking you as a person,
oh, what
Anthony,
would I
what would
do?
you do?
Um,
Yeah, I mean,
I don't
running,
know.
sports,
Yeah,
gym,
I would
whatever.
I would probably spend time writing. You know, um,
Ah, yeah, you're a rider. Yeah,
yeah. So I mean, that's one of my passions. I'd probably
yeah,
spend
very noble, very noble passion.
yeah, and currently I work in a lending group for a major financial institution, and one of the things that makes me feel best about my job is that, there are, we have a affordable housing unit, and there are situations where, we provide funding to, people who aren't able to afford market rent, and give them subsidized
Oh,
rent. And, I'm pretty sure a lot of those people probably would be homeless if not for that. Um, and, I get to like see those, and they're actually pretty nice. Like, they're actually, some of the apartments, like, I look at and I'm like, damn, I'd live there, you know? Or it's way nicer
but
than my apartment. What the fuck?
but
And that gives me
you
satisfaction.
know,
I don't know. Maybe I would get into real estate in some way, like
you
something like
know,
that.
okay. So now, just because we are talking about that, and you don't really have to answer if you don't want it, but it's that some sort of a non-profit organization, or what kind of a society company is that?
Yeah. So in America, there's a law called the Community Reinvestment Act, and
Okay,
so every major bank has a community investment division, and they
okay,
have to invest in like affordable housing and different social impact initiatives. Um, it's not really clear what the penalties are if they don't do it, but it's sort
okay.
of like an industry standard that they all do it, right? And if you were to break rank and not do it, then you would, you know, again, it's not clear
Um,
what would happen to you, but you certainly wouldn't get favorable treatment, and
all
banks
right.
are really
So,
worried about that. So
okay, just to help me to understand how it works in Chicago, or in the U.S. broadly. But so basically, every bank, they kind of have these, quote unquote, obligations to kind of running this program of social utility, like
yeah, so it was
providing.
the Community Reinvestment Act was passed in the wake of 2008, and the idea was that,
Okay.
like, look, the what happened in 2008 caused so much pain to real people,
Yeah.
especially in the real estate market, that
Yeah, I
amends
know.
need to be made. That you need to like absolve for your sins,
Mm.
which I think is, I don't think that that's unreasonable. I think they
Oh,
should
well,
compensate people.
yeah, yeah, I
So
think so.
again,
It's,
they're not
it's
compensating the people that they impacted directly. Some of those people probably like committed suicide, or like
no, it's just
fell off
like
the,
to a man, to society in general, right?
yeah, just to like, look, we need to focus on this, right? We need to,
Well, you know what? You never told me about this, but now that you're telling me about that, it's kind of a very interesting, branches of the company you're working in. I mean, it's like it's very noble because you can. I don't know about you, but it feels to me like, although maybe you don't really like a job, or maybe you're striving to something else, but no matter what, but at the end of the day, you are actually going out every single day to make a job which actually is helping out people. So at the end of the day, you can find some little bit of a
yeah,
motivation into it, right?
yeah, yeah, definitely. I mean, I sort of gravitated to the area of the company that, you know, would, in my opinion, would actually have a net benefit, right? It's like, because I couldn't work for a company that, and there are a lot of financial institutions where they do some good things, but overall in the aggregate, it's still a negative effect. But I definitely couldn't work for a company where like their primary product or service was like total bullshit. I just couldn't work for them. Like it.
Yeah,
How do I sell
you
a
still
product that's
retain some
bullshit?
sort of a
Yeah,
yeah,
I mean, I
okay,
know
yeah, I got it.
this is, I know there's people that can do that, and like, more power to you. Like, if you can do that, but personally, I just can't do that. I'm not not good at.
Well, I wouldn't put that like some sort of a power to people. It's just it's just a matter of preferences, right?
Yeah, but I mean, if we're honest, like most products and services, I wouldn't say are harmful, but are definitely not necessary. So most people are selling stuff that
Oh,
people don't really need
yeah.
and trying to
I
convince
was
them, to buy stuff they don't need. So
Yeah, I was like, let me guess, it's bullshit, but yeah, you laid off the point pretty well.
and
Okay.
then other people work for companies that are actively harming people. And, but the weird thing about that is like those people, most of them jump through a lot of hoops to convince themselves that they're actually doing good.
Did you? Okay, okay. Now, just since because you work in this type of environment, which I'm totally curious about because I have never had a chance to talk to someone who works in that line of business, right? So, have you ever had a chance to talk with you know someone who actually was in financial difficulties? Like, did you ever have the chance to have an interview with someone who was in the needs of money? Some sort of extensions on the credit line or refinancing of the debt, something like that.
Not really.
Or
I've actually never met a customer or a
all right,
tenant. Yeah.
which could which could be an advantage, right? Because I mean, it not being in the position to having to deal with the actual customer, it kind of takes out the emotional, the human factor
Yeah.
out of the job, right?
So probably the thing that not surprised me, but that I learned from working in the community division is that
Hmm.
everybody has like an idea of what poverty is, right? Like they have a conception of it, and they can when you say the word, an image comes to mind. They've walked past homeless people on the street. They
Right.
they know what that means, but what they don't, I think a lot of people don't understand, is the scale of poverty.
Yeah.
Like,
Yeah.
and when you, that was one of the things I realized is like when you look in a country like America too. This is the crazy part. If you look at the impoverished people within America, which is supposedly the richest country in the world,
40% of people
the ranks of the
beat.
impoverished are greater than every single standing army in the entire world by a lot.
Yeah, I know that.
And so,
The yeah, the latest data are actually showing that in America, roughly 40% of the population is below the threshold of poverty.
yeah,
So
and it tends to be concentrated in areas, in rural areas, you know. Uh,
that's a good point. Just because they tend to be concentrated in locations where you wouldn't expect, at least as a foreigner, you wouldn't expect to see that much of a concentrations of pores in those areas because you would think, well, something like, I'm just giving up a broad example, but you wouldn't expect to see. So are
yeah, I
you really
mean,
telling me that 50% of New Yorkers are poor? Well, really? You know,
yeah.
it's like
So
it's strange.
when I think a lot of people, when they think of poverty, they like think of the ghetto and like an inner city area,
Oh
and
yeah, I got yeah.
obviously ghettos exist, right? They're like black holes of money, right? People put money in them and then the money disappears. But the poverty doesn't necessarily grow; it's like contained.
Hmm.
But where the poverty is growing is in the rural areas, and
Yeah.
because in America you have like all these you have these rural towns in America where the town popped up around a major plant, right? Like the one near me in Illinois is in a town called Peoria, which is in like mid Illinois, and the whole town is popped up around a company called Caterpillar, which makes farming equipment. It's a huge company, makes and everybody in the town works for Caterpillar. Well, if Caterpillar ever left the town, what happens to that town? Every single person falls into poverty.
It's going under.
Yeah, and so Caterpillar's still there, and Peoria is a nice town because it's still there. But there are towns where that phenomena has happened, and it's a phenomena that's happening all over America as those plants, over the last decades. It's not new, right? As they ship to China or other countries, and also things get automated, and just all those rural areas, there's no reason for people to live out there, no employment. It's
Yeah, I guess to some extent you in the US are kind of lucky because in a sense you're kind of feeling the negative effect of this whole dynamic which is playing out around the world. But I mean, in Europe, it's much more, it's much more evident, right? Maybe you in America, you're kind of seeing it like a laggard indicator, but eventually it's gonna come to you as well. These, the labor market, unemployment rate, the participation rate, it's something which is gonna hit at a point. It's gonna hit, and it's gonna cause major damages in the economy, at least in the real economy. The way I see that.
You mean like the fact that people aren't participating in the labor market?
Yeah, I mean, for me, like if I look at my own country, right, which is okay, totally fucked up. Okay, I totally acknowledge that. No questions asked. But even when I look at data from the US, because I just look at them because I'm trading the forex market, right? So when I see the NFP, right, the non-farm payrolls, and then I look at the unemployment rate, and it looks like, on the surface, it's all well and good. But then I look at the participation rate, and it kind of boggle me a lot, because it's like, all right, it's like, if you look at it from the standpoint of the Fed, they are kind of look at it like we are reaching the full employment, right? Because look at the data. Yeah, but they don't consider the participation rate, and it's strange. You can have a lot of metrics which would suggest you full employment, but why don't you take a look at the participation rate? Because that's all there is, right? So if people don't participate in the real economy,
I'm just curious, what is your interpretation of that? Or why do you think the labor participation rate is low relative to?
Well, I just mean that, you can look at unemployment rate, right? And if you see that it's, on the lower band, and if you look at that data only, you could say, right? So, I mean, our dual mandates, it's, of course, stable prices and occupation, okay? So if you're looking at, the jobless claims, right? And if you're looking at the NFP or what have you, we can see that, yeah, we are doing a good job because those data are in line, okay? But I guess then you have to pair that data with the participation rate, because it's just, I guess for me it's just a matter of percentage. You can have an NFP which is really low, but on the other side, on the flip side of the coin, if you have a participation rate which is going down, that kind of invalidates your thesis about the NFP. because it doesn't matter if you have much more payrolls in those type of sectors, but overall in the grand scheme of things, if you have less people participating in the labor market, it's not that good. That means that a lot of people are lefting the labor markets.
Yeah.
So
So how do
those
you?
are all people which are not gonna have.
I don't. So I gotta ask you. I'm not really that familiar with interpreting non-farm payrolls. How is it possible for labor participation to be down and then payrolls to be up?
Well, because just they just look at statistics, like, for instance, mm, uh, and it kind of strikes me, because you should know that better, since you live there. But whenever they kind of come up with those data, they kind of run off some sort of a survey, and they go out and they ask uh, businesses what kind of appliances they had in the last month, and they kind of come up with a number, which is okay. So we could be good, we could be bad in relation to the type of contracts, labor contracts, which has been signed off or not. But the problem for me is not the amount of contracts of labor which has been signed off in this single month, because it's some you know it should be kind of natural, I guess. But let's face it, if you have NFP which is going up, right? So basically you have that data which is showing you that labor forces are getting stepping back in the real economy, right? But on the other side, you have the participation rate which is slowing down. Well, essentially, it means that, yeah, you have an expansion in new labor contracts which has been signed off, but on the other side,
So
that
if
you
non-farm
know
payrolls are up, or what are they up relative to? Are they up to like the previous non-farm payrolls?
exactly, yeah, it's all
Okay.
it's all relative.
Okay, so yeah, so it's
So
greater than the last time, but the labor participation is still low, essentially.
yeah, you know
Okay,
that. I
yeah.
mean,
So
so
I
you
get,
could
yeah, I
have
see
a
what you
number
mean.
which is higher, but yeah,
So the way
it's
I would
like
interpret that,
yeah.
so I am aware of the labor participation rate being so low, and the way that I interpret that is that I see that kind of, and this might be an unorthodox opinion, but I see it as a little bit of a canary in the coal mine. It's like of automation, like already revealing itself.
Well,
Like
it could.
we're you have different dynamics, right? Like you see people outright not being able to find work, because their jobs have been automated, or the jobs that they are able to find are jobs that they don't want because automation is a competing force on labor, right? And it's driving down prices.
And it could be, but regardless. But even if you have people which are not willing to get back to their jobs